Investors are jumping onto exchange-traded funds or ETFs. There are now more than 120 of them traded on the Toronto Stock Exchange, even though the underlying securities are global. What does it mean to invest in a TSX-listed exchange when you could have had one in New York? Today we have Oliver McMahon, a director with BlackRock, the iShares Canada division. Thank you for joining us, Oliver. So why would you want to buy TSX-listed ETFs instead of New York Exchange ones?
Well, thanks for having me, John. Well, I think there's two things that an investor really needs to be aware of in this situation. The first one is US estate tax, and the second one is the cost of converting your currency.
And the big one, of course, I think is, I don't know how, it seems like not too many people will be affected by the estate tax, but correct me if I'm wrong.
Well, so the current limit for estate tax, or the US estate tax applies from 2011 to anyone who has more than $60,000 in their US assets and more than $1 million in their worldwide asset portfolio. And of course, this includes life insurance. So I think it could affect more people than you would initially think.
So just take me through that. So if it were in the States, if the estate taxes is what? And by being in Canada, what happens?
Yeah, so the US government has a right to see any asset, any portfolios and estates of people that have more than $60,000 in US assets when they die. And through this, they can then calculate an amount of US estate tax that they are able to then claim from that person's estate.
Whereas if you invest in the TSX-listed one?
Exactly. If you invest in the TSX, you are investing in Canadian property. There is no US estate obligation at all.
Now, on the currency side, you're basically saying there's a 2% round trip. Like if you're Canadian and you buy a US, like for example, the QQQs or the diamonds, you buy a US security one in Canadian dollars. Now, how do you get around that by being listed in Toronto, even though the underlying securities are still global?
Yeah, you're exactly right. So if you start off with Canadian dollars and buy a US security, or a US stock for that matter, you're going to pay 2% in conversion fees to get your Canadian dollars into US dollars, and then 2% again back when you repatriate those assets. However, if you choose to invest in a Canadian domiciled asset, you will buy through the Toronto Stock Exchange, and the portfolio manager will trade that currency on your behalf. And institutional currency rates are much, much lower than those available to the retail public.
So if you're a buy and hold investor and you have a 30-year planning to hold, it doesn't matter so much if you bought you can buy Barclays US listed ETFs or the Canadian ones. But if you're a frequent trader, it sounds like you should go with the TSX listed ones.
Absolutely, or you certainly should be aware of the ramifications you can encounter by trading in New York or by trading on the Toronto Exchange. Absolutely.
Now, what about currency hedging? Now, most of yours are not hedged back into the loonie, although some competitors do, particularly if they have ones that are basically ADRs.
Yes.
Why do you not? Is that a philosophical different opinion?
Well, so some of our products are hedged back into Canadian dollars. Some of the US products, some of our fixed income instruments are as well. Exactly. But you're right in that some certainly aren't. Some of our emerging market products aren't. And generally we feel that some investors would rather benefit from changes, from diversification in having exposure to those emerging market currencies.
Oliver, just to explain this, some of your products are both available in a TSX-listed version and a New York-listed version. Give us an example of and what the exact difference is.
Yeah, so some of our US products are exactly along those lines. So we've got XSP in Canada, and there's IVV and SPY in the US, which are very similar US-based products. However, XSP has a Canadian dollar hedge, so a Canadian investor will get the US dollar return in that product.
Okay, so they both own the same 500 securities.
Yes, exactly. They both own exactly the same securities, or generally exactly the same securities, but one will have a Canadian dollar hedge.
Okay, and maybe the MER is slightly different in the two cases.
Yeah, the MER is slightly higher for the Canadian product. Again, you're paying for that hedge. There's an extra workload there, but hopefully the added diversification that you get from adding the US product into your portfolio makes up for that.
Thank you very much, Oliver McMahon, a director with BlackRock, the iShares Canada unit.
Thank you.